Hi everyone, and welcome back to my channel. Today I have a very important question for you. Are you the type of person who wants to grow their money tax-free? If your answer to this question is yes, then please continue watching as this video is for you. Let's say you're 25 years old. And every year you contribute $1,000 into this investment vehicle for 40 years until you retire at the age of 65. At a conservative growth rate of 7%, your money will grow tax-free to $228,116.56. However, if you wait till 40 to contribute $1,000 a year, your money will only grow to $74,483.82 by the time you're 65. As you can see, time is key when it comes to compound interest. The more time you have, the more your money will grow. Therefore, it's really important to start investing into this tax-free account. You guessed it, the investment vehicle I'm referring to is the Rrsp, which is a retirement savings plan. Again, in today's video, I'm going to be going over what is an Rrsp, how much you can contribute, who can open up an Rrsp, what happens if you go over your contribution room, and what happens if you withdraw money from your Rrsp before you turn 71. And lastly, I'm going to be going over the pros and cons of having an Rrsp. Again, if you like this video, please be sure to give it a thumbs up, and if you haven't already, please subscribe to my channel. Let's begin. Rrsps are basically a gift given by the government as an incentive for people to save for retirement. A key reason to invest in the Rrsp is that all contributions to the Rrsp are tax deductible. With the cash in your Rrsp account, you can purchase any investments you like, whether those are stocks, bonds, ETFs, GICs, etc. Any amount you invest in your Rrsp reduces your net income for tax purposes. So every dollar you contribute is a dollar taken off your taxable income. Let's say someone is making $100,000 a year. They're in the 45% tax bracket and they contribute $10,000 to their Rrsp. This means that their taxes payable will be reduced by $4,500, or they will receive a $4,500 refund if this person has no taxes payable. Another example of this is, let's say if someone is now making $60,000. This means now that they're in the 30% tax bracket and they're also contributing $10,000 to their Rrsp. This means that their taxes payable will now be reduced by $3,000, or again, they will receive a $3,000 refund if this person has no taxes payable. So something to keep in mind is when you contribute to your Rrsp, you can take your contribution and deduct it from your taxable income or receive a refund at any point in time. So the best strategy for tax planning purposes is to deduct your contribution in a year where you have a high marginal tax rate to realize the most amount in tax savings. The amount you can contribute to your Rrsp is calculated based on your previous year's earned income. You can find this information by logging on to your CRA My Account or looking at your current notice of assessment. Your Rrsp contribution room is the lower of 18% of your previous year's earned income or the maximum contribution limit. The maximum contribution limit for 2020 is $27,230. It's important to know that the annual maximum changes every year. Let's say you made $60,000 last year. That means you would have earned $10,800 in contribution room. Don't worry about maxing out your contribution limit every year, as any unused contributions just get carried forward and added onto available contribution room for future years. You have 60 days after the calendar year to make your Rrsp contribution for the previous year. You can be any age to start up an Rrsp as long as you report earned income. And you can continue contributing to your Rrsp until the end of the year in which you turn 71. After that, you must withdraw the assets and convert them into a registered retirement income fund, also known as a RRIF, or purchase an annuity. A lot of you are probably thinking, what happens if I go over my maximum contribution room? The good news is you can contribute up to $2,000 over the annual maximum limit without being penalized. So the penalty for over-contributing to your RRSP is 1% on the amount exceeding the $2,000 cushion. If you exceed the $2,000 limit, you need to take those extra assets out of your RRSP as soon as possible. Once they are withdrawn, the CRA will stop charging you a 1% monthly fee. If you were to withdraw money from your RRSP prior to your 71st birthday, your financial institution will hold back a portion of the tax and pay the federal government on your behalf. So as the table shows, if you were to withdraw $5,000, the financial institution will withhold 10%, which is $500, meaning you will only receive $4,500. In addition, you will have to add the full $5,000 onto your taxable income and get taxed again at your marginal tax rate. This is why early withdrawals are not recommended, because you get taxed twice. So to wrap up today's video, I'm going to be going over both the advantages and the disadvantages of using an RRSP. So the first benefit of using an RRSP is that all the contributions are considered a tax deduction and will lower your net income. The second benefit to having an RRSP is that all the investments made inside the RRSP will grow tax-free. This lets your investment compound much faster without incurring annual taxes. The third advantage to having an RRSP is that you can borrow from your RRSP to buy your first home or to pay for your education. But of course, you're going to have to pay this money back. The last advantage to having an RRSP is that the RRSP savings are protected from creditors. This includes claims from lawsuits or bankruptcy. The first disadvantage of using the RRSP is that all income earned within an RRSP becomes ordinary income. This ordinary income gets taxed at your marginal tax rate when you withdraw or collapse the RRSP. The second disadvantage to having an RRSP is that RRSP withdrawals can impact government benefits in retirement. This can lead to clawbacks on OAS or GIS. The third disadvantage to having an RRSP is that if you make a withdrawal, that contribution room is forever lost and you are not going to get it back the following year. And finally, the last disadvantage is that the RRSP contribution room is based on your gross income. In low income years, you'll actually accrue less contribution room. So that's it for today. This video was a look at the RRSP from a beginner's perspective. I will also be doing an RRSP video for more advanced users in the future. If you like this video, please be sure to give it a thumbs up, and please leave me a comment to let me know your thoughts on this video. And if you haven't already, please subscribe to my channel, as it would help support me a lot. Until next time, guys. Bye.